This is Colin Cattell with another episode of Palisade Radio. Back on the show today with us on video is Bill Holter of the Holter Sinclair collaboration. Bill, thank you so much for joining us.
Good morning, Colin. My pleasure.
Thanks for coming on video. I know it's hot there in Austin, so we'll try to keep this interview quick so that you don't start sweating on camera too much. The most important and pressing thing I want to talk to you about is the Chinese yuan devaluation. I'm getting a sense that the main media is downplaying this or has no understanding of what the implications are here. What did you think when you first heard that the yuan devalued?
When I first heard it, I immediately thought that it was a response to the IMF not letting them become a component of the SDR until at earliest next year. So I view it as a response or retaliation or what have you.
So now that things have sunk in for a week and there was in fact a second devaluation the night after the first, what do you think?
There were three.
There were three, correct. So what do you see unfolding moving forward? This certainly doesn't set a good precedent for the dollar, which is already struggling by being such a strong currency against all the other currencies.
Right. Well, one thing even the mainstream media is beginning to pick up on is a devalued yuan makes it almost impossible for the Fed to raise rates a quarter point or whatever they were going to do in September. So I think it takes a rate hike off. I don't think that's a possibility. The other thing is, if you look at in the past, the U.S. has accused China it seems like it's almost every quarter of being a currency manipulator. In other words, the U.S. has argued that the yuan should be stronger, and they've pushed, they've prodded, and they've publicly called them a currency manipulator, saying that the yuan should be a stronger currency. So what China did was an exact about-face opposite to what the Fed and Treasury have been asking for or even demanding.
Okay, but we keep talking about the importance of the strength of the U.S. dollar, and yet, at least from an optics standpoint with the market holding together in the U.S. and all of the other economies around the world not looking as strong as the U.S., people are questioning, does it really matter if the U.S. dollar is strong?
Well, it does matter because a strong dollar creates a more difficult margin call to meet. It makes the debt that foreign countries have borrowed and foreigners have borrowed in, it makes that debt more difficult to pay. And since last September, October, when the dollar really started to strengthen, that's what the stronger dollar has acted as a constant, everyday, nagging margin call that has been, there's been a need to meet it. A strong dollar, a stronger dollar, will in effect constrict trade further. It'll constrict the global economy further until you get a collapse and everything just shuts down. And when that happens, you're talking everything is credit, so everything comes down. In other words, the dollar becoming strong could kill the dollar, if that makes sense to you.
One would think that with the dollar being this strong, that things would have kind of already started to unravel. And I go back to this point again. Why do you think at this point that there hasn't been more of an issue? And then also one would think that the Fed can't raise interest rates right now, but some people have been a little bit shocked that they've been able to go on their current course as long as they have without worse things happening. So would you be surprised if they do raise interest rates?
Well, I'd be shocked if they raised interest rates. I think if the Fed were to raise interest rates, that brings into question over $1 quadrillion worth of derivatives, because all derivatives have an interest rate function within them. So it would change the assumption on all derivatives. All derivatives would have to be repriced. It would also change the valuation assumption of all assets, of stocks, bonds, etc. So, like I said, a stronger dollar, you're asking me, should it have already occurred? I think it's been occurring. If you go back and you look at what happened in the European credit markets back in May and early June, their credit markets literally collapsed. The German Bund went from 0.04% to 1 full percentage point within 3 weeks' time. That was a 20-fold increase in interest rates in just, 15 trading days. That was a collapse. So a stronger dollar is creating tightness or illiquidity in the system overall. And I think it is happening. You're seeing it across the board in commodities. Look at oil.
Good point, Bill. Do you think that the report that came out of China a few weeks back, referring to the gold holdings going up to 1,677 tons, was a load of crap, or does that make sense that they have been accumulating, but not to the extent that a lot of people had been guessing?
Oh, I think that was laughable. China imports 200 tons per month and have been doing that for over 2 years. So, I mean, right there, you're pushing 5,000 tons of gold have gone into China in the last 2 years, plus the 800 tons that they produce 400 tons per year internally. None of that ever exits the country. So that's another 800 tons. So now you're up to almost 6,000 tons just in the last 2 years, and they're saying 600 tons in 6 years. It's ridiculous. My initial thought on that was they needed to show that they had some more gold in order to enter or become a component of the IMF. And that was my thought process as to why they only announced another 600 tons. And then, of course, the IMF rebuked them. Uh, and like I said, I think the devaluation of the yuan is absolutely a retaliation.
Yeah, that makes a lot of sense. On the point of gold, it's gone into something that a lot of people don't know what it is, called backwardation. Can you define that for our audience and talk to us about what it means, the implications of gold going once again into backwardation?
Right. It's not. It's a, I guess, a difficult concept to grasp. But if you break it down, it's like a bird in the hand versus two in the bush. Gold today in your hand can, in a normal uh, system, in a system where the rule of law prevails, an ounce of gold today can never be worth more than an ounce of gold in a month or 6 months. And that's because you can earn interest lending your gold out and then getting your gold back. So the term backwardation should never ever happen. It theoretically cannot happen, except in the real world it does happen. It's only happened, I think it happened once in 2001, and then it happened again once in 2008. And for the last year, we've been in and out of backwardation uh, at least a half a dozen times, and we're in I think the deepest backwardation of all right now. And what that's saying is that people want the gold, they want it in their hand because they don't trust that a contract that says they're going to give them gold in a month or 3 months or 6 months, they don't believe that they're going to get delivery on their gold. So they'd rather have it today. Think about this as an investor. If you had an ounce of gold or a ton of gold or whatever, and you lent it out, and you knew you were going to get your ounce or your ton or whatever back in 6 months plus interest, wouldn't you do that rather than storing it and paying the storage? Instead of paying money out of pocket, you've got income coming in. So that's a no-brainer. And that's, in a normal world, that's the way the gold market works. Today, it doesn't work like that. Today, people would rather have the gold in hand, and they're not lending it out. And the other thing is, it is a definite sign of tightness of supply. There's entities that are scrambling to secure physical gold in hand, whether it be to deliver or to create jewelry or coinage or what have you. But there's definitely a tightness in supply that we've not seen to this severity before.
Based on the way that you just explained backwardation, I would think that you're using that somewhat as a meter for worldwide fear, because people wanting to
Right.
hold on to their gold would indicate that they're worried about tomorrow.
Well, it's not so much worldwide. I guess you could say fear, but I would call it lack of trust. Lack of trust that your contract is going to perform.
Okay, so as the inputs begin to unfold, we get more information every day. The big one last week being China devaluing. It changes the outputs in your mind, and I'm not asking you to make predictions, but certainly you've had some ideas about how this can lead to events unfolding. You've said many times that the end is nearer than later.
Oh yeah.
What does the China situation mean moving forward for the next 6 or 12 months?
Uh, that's assuming we have a system that's functioning for the next 6 or 12 months. I don't think we get 6 to 12 months out without something breaking. Something has to change. The dollar has to weaken. Liquidity has to loosen. Trust has to come back into the marketplaces, and I don't see that. I believe this is going to come to a head within the next month or two.
There's a strange amount of normalcy that people seem to give to the current situation. As an example, I'm in Canada right now. People are jumping around saying, "Oh, listen, the Canadian dollar is at 1.31 to the U.S. dollar." However, back 20 years ago, there was actually at 1.5 to the dollar. So this
Right.
this isn't that unusual, and so they're not necessarily giving that much attention to what these currency devaluations mean.
Well, from a currency standpoint, it's a strong dollar, and you've got uh, the foreign countries racing to the bottom to devalue as fast as they can. And the reason this is happening is because the trade pie, the global GDP pie, is no longer growing. It's staying the same or actually shrinking. So there's less business to be had. And the way it's always been done is to beggar thy neighbor. It's if you devalue your currency, you're able to do more volume. So you're doing more volume in a shrinking pie, but you're taking volume from somewhere else. You're taking it from another competitor. So it's a race to the bottom as far as currencies are concerned, and it's across the board.
Absolutely. I don't want to dilute our focus on China and currencies, but we've talked in the past, and one of the major talking points, especially a few months ago, was Ukraine and Russia situation. You seem to think that there might be some developments going on in the Ukraine just this week. What can you tell us about that?
Well, not even just this week. Just last night, I read a couple articles this morning that apparently the Minsk agreement ceasefire has broken down, and we do know that last week and throughout the week, Russia had been staging troops on the border. Now, I have no idea whether they've crossed or not, or what that situation is, but we do know that they were building up. And the information that I got last night and early this morning is that fighting has broken out in many cities. So that bears keeping an eye on.
Anything else going on geopolitically that's on your radar screen? Greece has seemed to die down a little bit in the press.
It's died down, and it's because it looks like they've kicked the can, and now they're going to end up with a 400 billion euro debt. Uh, 300 was unpayable. 400's more unpayable. So, yeah, that's kind of backburnered. I still am very curious to find out what uh, what China says, what scientists say over that port explosion in Tianjin. It's a very important port. That's huge for their iron ore and steel imports, exports. There, that's a huge port, and I think the jury's still out as to exactly what happened there.
Back up for a second for the sake of our audience who haven't been able to read the article you put out a few days ago. What happened with the port explosion?
Well, it was a massive explosion. It was filmed from many different angles. Uh, Many are saying that no, it's absolutely impossible to be a nuke, and some people are saying that, just compare it to the Texas City in 1947. Well, you really can't, because that explosion in Tianjin left a 3-acre crater in the ground that's filled with water. And as far as I know, in Texas City, that was in the boat or in a ship itself. It didn't leave a hole. I don't know. Like I said, the jury's still out. I spoke with a nuclear physicist who told me uh, they believed that it looked like, to them, a fuel ordnance explosion. And we do know, as of, I guess it was Sunday, that China had sent in both chemical and nuclear scientist troops to try to determine what happened. No matter what it was, I view it as very suspect. And I said this last week, and I still believe this. The timing of that explosion to the port is very suspect, because it came right after, or actually on the third day of 3 days of China devaluing the currency, which is absolutely 180 degrees off from what the Fed and the Treasury wants them to do. They want a stronger yuan. China devalued.
Finally, Bill, I want to talk about the U.S. market. I know that you kind of ignore the U.S. equities and instead play the potential crash that's going to happen by owning gold, owning
Right.
some gold equities. Do you have any interest in playing short positions on the U.S. market? Are you saying, listen, look at China, for example. They just made it illegal to short the darn thing, so why am I going to even try?
Well, that's a thought. I hadn't even thought about the Chinese thing. I've heard that there have been some executions over short selling. But uh, that said, if you short stocks, what are you going to win? You're going to win dollars. And in a devalued dollar situation, did you really win? And the other question is, if you're going to short stocks, you got to be able to borrow the stock to do it. You got to be inside the system. And I've told people for several years, get out of the system. Get your gold and silver delivered. If you own mining companies, have those certificates delivered. If you're shorting the U.S. market, that means you have an account with a U.S. broker. And I firmly believe that we are going to go into a banking slash broker slash financial holiday where everything closes. How do you get paid? How do you get paid if your broker goes out of business? How do you get paid if the other side of the trade goes out of business? You don't. This is not about trading. This is about securing your bridge from this system to whatever the next system is going to look like, and it won't look too similar to what the current system is right now.
Okay, thank you for that, Bill. We're going to end the interview at this point. Thanks so much for coming back on the show. Always a pleasure. Bill Holter. Bill, can you give us your website? I read almost every single day. You send out a great article, always asking appropriate questions, questioning things that you're not going to find anywhere else on the internet, and I think it's worth all of our listeners checking out.
Yeah, you can go to www.jsmindset. That's JSMINESET.com. You'll find all my works and other works.
Bill, thanks so much. Have a great rest of the day.
Thank you, Colin. My pleasure.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw material. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, troll, did you hear what's going on in Yemen? Or are you too stupid?